Thank you for joining me, and I want to talk about why you need to start investing right now, and also hit the subscribe button if you want to learn everything there is to know about investing in personal finance. So first of all, you lose money to inflation, which means if the rate of inflation is at 2%, which is a fairly low rate, then every year $100 you have saved up turns to $98, and the next year it turns to 96.2-ish dollars. So any money that you have saved that you're not investing is going to lose money over time, and you're not going to have as much money later as you need. Then you need to practice investing, which means that you need to have money in the stock market or whatever else you want to invest in and play around with it pretty much. In the stock market, that means you need to buy a stock, you need to lose money with that stock, you need to make money with that stock, and you need to kind of desensitize to the fluctuations of everyday stock market investing. The whole investing thing is a very long-term thing, and you need to get familiar with the whole process and the time that it takes to grow your money. That means that you need to not panic when the stock goes down, you need to not panic when the stock goes up, and you need to get emotions out of the way, have a logical approach to things, and reevaluate what your stocks are doing, how the stocks are affecting you, and pretty much go from there. Like, all that is a thing that takes time to learn, to practice, to endure pretty much. Then you need to hit the like button if you haven't done that already, and you need to learn about compound interest, which means if you have money invested at, let's say, an 8% interest rate, which is what the S&P is doing historically, your $100 are turning into $108 over a year, about. Obviously, no one can predict exactly what it's doing. It's just, on average, it's going to appreciate by about 8% every year. So after 1 year, you would have about $108, and after 2 years, you would have close to $117, because the interest you get this year will make you interest next year, and so the money essentially doubles every 6 to 8 years. Which means in, let's say, 8 years you have $200, and then in 9 years you have $216. So the compound interest is a great factor for investing, and you need to find a compound calculator and play around with that, because it will really open your eyes as to what your money is doing and why it's so important to start investing as early as you possibly can. And the most important point here is you will not have a good retirement without investing at some point in your life. And with the compound interest being such a great factor, the sooner you start investing, the better. And obviously you need to get the full 401k match. You probably should start a Roth IRA. You need to save a lot more money than what people recommend, because what people recommend is fairly low, and you will have a significant cut in lifestyle for retirement if you follow advice of the more mainstream outlets, because they don't want to get people down with just how much you need to save. But if you were to save 50% of your income and not invest, obviously after 30 years you have enough saved up for 30 years of retirement. So if you start at 20, you literally save 50% of your income every year for 30 years, then you're 50 years old and you have 30 years of retirement before you run out of money completely. And with inflation, that is not even that great, right? However, if you're 20 years old and you stick 15% of your income, so half that, into an investment account that follows the S&P 500, you will not have a cut down in retirement in lifestyle, and you will have that money indefinitely, which means, let's say that you're really lucky and you make $50,000 a year when you're at age 20. You save 15% of that, and you retire at age 50. Then at age 50, you get $50,000 a year from the investments without cutting down in the principal, which means even if you're going to be 250 years old, you're going to have $50,000 every year for retirement. If you start later, the same applies, just postponed. So at 30, if you save 15% of your income, then you can retire at 60 and have the same retirement. But if you want to retire at 50, you need to double the amount you've invested. Again, play with the compounding calculator. It will open your eyes to a lot of things. So with that said, I have a Robinhood link in the description below if you want to invest without any trading fees. Make sure to play around with that. Also, S&P 500 index funds are free on a lot of sites. So check out Vanguard, check out Fidelity. You can buy pretty much any index fund that you can think of right now, completely free. The management fee is really low. So if you're not thinking about trading individual stocks, I would recommend opening a Roth IRA with Fidelity or Vanguard and buying index funds in there. Because as soon as you hit 59.5, all that money is completely tax-free. So open a Roth IRA, throw all the money that you can save without affecting your emergency fund and your monthly bills and all that. Throw that into a Roth IRA. The max contribution is $6,000 a year right now. And buy some index funds and just watch your money grow to enormous sums over time. That's it for now. I hope you have a successful day.